Thank you very much for everybody for joining this first seminar between Morcom and Costa Associate. So today the subject is how to enter the Chinese market. Do you have to do it by yourself by setting up a new company, or do you need to purchase a company? What is the tendency today on the market? When we decided with Marco D'Amor to organize this seminar, we discussed about our past experience. And 15 years ago, when you come to the Chinese market, merger and acquisition was not an option. The last one is coming. So merger and acquisition was not really an option. Most of the companies decided or to set up a foreign invested company through a WFOE, a wholly foreign enterprise, or decided to set up a JV with the Chinese partners. But merger and acquisition was not really the third option. Why at that time? I think there were two main reasons. The first reason was the compliance of most of the Chinese companies in China. At that time, legal compliance was not the key, and it was very difficult to purchase a company which is not compliant. And when we did due diligence 15 years ago, it was really a nightmare to secure the deal. So I think the market was not ready for acquisition. The second reason for this, for me, was the regulatory framework. It was very complicated to purchase a company in China because at that time you need a specific approval for most of the industry from the MOFCOM, the Ministry of Commerce, and it could take a lot of time, and we didn't have a clear deadline to do the closing. So because of this compliance issue and the long process to get the approval, the deal approved by the Chinese authorities, it was very, very, very complicated. So the seminar will be in a different party. Yes, let me just close it. So we'll discuss about the challenge and the benefit for the foreign companies to invest in China. We'll discuss about the impact of the Chinese foreign investment law and the investment possibilities and the setting up of the company versus merger and acquisition. So today I have the pleasure to make this seminar with Marco D'Amor. I think I'll let you introduce yourself, and after I will introduce myself.
Thank you very much, Nicolas. Hi, everyone. Some of you know me. My name is Marco D'Amore. I'm Italian and Swiss. I am the CEO of Orcom in Asia, which means 3 offices in China, 1 in Singapore, and 1 in Hong Kong. I'm basically helping company to set up and manage their operation in China. I am more the accountant and tax guy, so a little bit more boring than the lawyer, but still I can be very useful when we need it. I have a CPA certification from the US. I did the hospitality school in Switzerland, and I speak 4 languages. I graduated from an EMBA at IMD 4 years ago. As Nicolas said, it's a pleasure to be with you today, and we really hope we can give you some hints about what kind of investment you should prefer according to your needs.
Yes, so I'm Nicolas Coster. So I am a French lawyer registered at the Paris Bar Association. It's my 18th years in China. So I have a long experience for setting up companies in China, purchasing company, closing sometimes the companies. I set up my firm, foreign firm in China, from China, 7 years ago, and we are very specialized in foreign investment on the advisory side and also the litigation side. We do a lot of litigation also with shareholding agreement and commercial litigation. So I speak French, English, and Chinese a little bit. And of course, I'm also a commercial arbitrator in China with the main commercial arbitration commission, CETAC, SHIAC, and Maritime Arbitration Commission in Shenzhen. So we'll have a Q&A session at the end of the seminar. So if you have any question to ask when we are talking, you can use the chat of Zoom to ask your question, and at the end we'll address each of your questions. And of course you can also open your micro at the end and ask the question directly to the audience. So investing in China for foreign companies. So all of us, or most of us except one, are based in China. So when you don't know China, or you didn't come in China for a lot of time, and when you read the foreign newspaper, you may ask, well, do you want to invest in China, and what are the main reasons to invest in China, and is it a good idea today to invest in China? When some of my clients call me from Europe, I always told them, look guys, if you have a middle-sized company or a worldwide company, you cannot avoid to invest in China, because China is still a top global economic player. It's very hard today for a foreign investment company to avoid China on the market, because if they are not investing in China, the Chinese company are going globally, even if it's slowing down, and you have good chance that in few years Chinese competitors will be on your market. So you need to be on the market of the Chinese competitors before they come to your market. And don't forget that despite the COVID and despite the political risk, which is much more higher than before, China will be in the next 5-10 years probably the first worldwide economy. So yes, it is difficult now during the COVID to invest in China, but to not be on the Chinese market probably will be a big disadvantage in the next few years. The second reason to invest in China is each of the tier 1, tier 2 cities like Shanghai, Beijing, Shenzhen, Chongqing, Chengdu, they are very high dense population with very high consumer user income. So even if you cannot cover China, and I always explain to my clients that China is like Europe. You know, you have when you go to Beijing, you don't do the same way the business than in Shanghai. So that means even China, it's one country. You have a very big cultural gap between all of the province of China, and you cannot cover all China. So anyway, you have to decide where to invest in China. And if you decide to stay in Shanghai or in Beijing, it's enough to start on the market, because the consumption power of this population is very high. Something very interesting that few people know is that foreign companies account for 25% of China growth output. That means the stake of the foreign companies in China is 1/4, which is very huge. Which means also that it is possible to do business in China, it is possible to do money in China. And when I check my client who stay on the Chinese market, and none of them decided to leave China at the moment, all of them were able to do money during the COVID time. Less money, of course, and they got difficulties linked to the COVID situation, but they are still doing money in China, and they are still confident to invest in China. And you know, that's the proof that Chinese investor, of course, they get the majority of the market, but 1/4 of the market belongs to foreigner. The first reason, it's sometimes you don't have the choice to invest in China for some industry, because the Chinese industry is very vertical, and you can find everything you need to produce in China from the start to the end. And not so many countries today are able to provide everything to make one product. So some of my clients told me, you know, because American companies are moving a lot to Vietnam, so they close in China, they move to Vietnam. But when you check, well, of course it depends on your product, but when you check Vietnam, they are not able to produce everything. Like for trolley, for example, for luggage, it's very hard today to buy everything in Vietnam. A lot of pieces have to be sourced in China. So for manufacturing reason, it's still much more efficient to invest in China, to produce in China, maybe not to export to US or to Europe, but at least to cover the Chinese market, because you can produce everything in one place. And when you have logistic cost increase, you cannot source one piece in Mexico to send it to China and another piece to Japan to set in China and to do the final product. So you need to get a place when you can source everything and get everything very fast. The last point, which is very interesting, is when you invest in when China is growing, or when the European economy or the American economy are going down, China don't follow immediately the same way. That means it's not because US economy and European economy will go down that China will go down. So if you want to mitigate your risk of investment, China is also a good place to mitigate this risk, because the Chinese market is not as a low correlation with the other worldwide market.
Now let's move a little bit to the challenge. So all the people being in China knows that there is some challenge. The first one is usually what we call the unknown. It means we usually don't know what's going to happen. The uncertainties about rules, about the evolution of the situation. We do have political stability, I would say, but business-wise, people working with China knows that it could be very fast and very changing. The second element, it's I don't teach you anything here. It's the language and the cultural difference. The fact that having a local team with foreign management, or either being in need of supervising local team from overseas, it's always a complication due mainly to, I would say, compliance, because the level of, I would say, tolerance and the level of implementation of compliance could be different from which perspective you see it. I would say that French or German group that are my client have a clear perception of what compliance means, which is not always what the local teams believe. So this cultural gap needs to be considered. The third point is the regulatory landscape. I used to say that it's fast and furious, because in China you have a lot of change quickly, and there is no time to adapt. As you know, when there is in 2012, when there was the VAT pilot, I think in 1 month we went to full VAT for all the country. The same when we changed the VAT rate, when there is eventual subsidy, change in tax rate. So everything is fast. So you have to keep the pace, and you have to make sure you don't have mistakes. So compared to other market, this is very complicated to make sure that we are always compliant. So tax is an issue. Any new laws that are getting very, very fast in the process. Or the last example, if you remember last year, for the people who knows China, there was supposed to be a significant change in the tax reduction for foreigners. And that change was basically withdraw on the 31st of December. So it's very difficult to make budget when you have to change them on the 1st of January. And the last point about challenge, it's today, it's the post-COVID area, while we are still in a society with heavy restriction. So that impose some choices which are forced. For example, a lot of people are localizing the management. People are leaving, so we have to put local managers, and the difficulty to travel to visit them add the complexity of relationship, of communication, which with the time, as we saw also in the different, I would say, survey from the chambers, there is a distance, there is a gap that start to create between the management in China and the head office in France, in Germany, in Italy, where because of the lack of travel, there is this gap, and it's much more difficult to get project approved and things going on. So this is something that need to be.
Thank you, Marco. Okay, so whatever you decide, which option you choose, if you decide to set up a new company or to purchase a existing company in China, or part of 100% of the stake of this company, the first things you need to understand and you need to know is what we call the foreign investment catalog. So today, the foreign investment catalog, this is something we don't look so much because there is very few investment which are forbidden in China. But when I arrived in China in the beginning of 2000, this is something we always print on our desk. We read that every day, and it changed maybe once a year or once every 2 years. So it was a very steady document to be followed. So what is a foreign investment catalog? The foreign investment catalog is a catalog published by the Reform Commission of China, which decide what is allowed for foreign investor, which industry you are allowed to invest in China, which industry you are prohibited to invest in China, encouraged or restricted. Today you have also two catalogs. That means you have what we call the free trade zone catalog. So you have, in China you have a special economic zone, like in Shanghai and most of the city, Beijing and so on, where the condition or investment are considered more flexible. So you have this kind of catalog which are much more open than the foreign invested catalog, the national one. To give you an example, it's possible to set up a company in FTZ to produce satellite, and it's not possible to do it in mainland China. Foreign investment catalog, as I mentioned, it's something we don't look at it very much. The last change was on December 31, and the main change was to allow foreign car manufacturing to be able to produce car alone without Chinese investment. So for some of you, you know Tesla set up a manufacturing company in Shanghai 2 years ago. Why they were allowed to invest by themselves alone is because Tesla was investing in the Shanghai free trade zone, and in Shanghai free trade zone it was possible at that time to get 100% as foreign investor. Since January 1st this year, now in all mainland China, it's possible also to get 100% equity in a car manufacturer in China. We got a new proposal of change in May. So it's moving very fast. This catalog is changing every 4-5 months. And every time we have a new publication of this catalog, every time the list of the prohibited area is smaller and smaller. So I think we have 33 prohibited area, like a military area, and the next catalog should be about 31. So, but anyway, for some specific industry, you have to check this catalog, and before to decide to invest, you have to be sure you will be able to invest. And if you are restricted, it's not you cannot invest, but maybe you will be obliged to have a Chinese partners or to get a specific approval from the Chinese government. So what are the investment options? So the first options we would like to discuss is to set up a company. And the second option is merger and acquisition. Just to be clear today, to set up a company since 2020, this is not anymore what we call a wholly foreign owned enterprise. That means it's not a company you set up by yourself with foreign investment. WFOE disappeared in China. So now when you set up a company in China, you can only set up a private limited company like any Chinese. There is no discrimination between foreign investment and Chinese investment. This is exactly the same company. You can set up a representative office, a partnership, or a joint venture, but the same joint venture does not exist anymore. It's also a private limited company. So the Chinese state, since 2 years, passed a new law saying that foreign investment use the same vehicle under the Chinese company law to set up a company in China. And the second option is, of course, merger and acquisition. So to set up a company in China, this is what we call the Yoshengongse. So it's a basic private limited company. For French, it's very similar to SARL. Sorry, let me enter. Yes. So for French, it's very similar to SARL. When you know companies in UK, in US, or in France, frankly speaking, Chinese government just copy the company law of this country. So there is nothing very specific about China. So the first things to set up the company is to gather all the requirement documents. You just have to prove the identity of the investor. So you need to notarize, legalize the passport of the investor if it's a foreign individual, or you need to notarize, legalize the certificate of incorporation of the investor. Once you get this document, then you just apply online in the Market Supervision Administration system to get the name of the company approved. And once the name of the company is approved, then you can sign the lease contract with the landlord, and you can file the application on site to get the business license. This process 15 years ago, it will take between 3 to 6 months to proceed. Why? Because at that time, one of the requirements of the government was to provide a business plan to prove that your investment was reasonable and you will be able to finance your investment with your registered capital. So it was an approval process. That means you need to submit a full file to the Chinese government, and the Chinese government will say, yes, this file should work and you should be able to do profit, and they can reject the application. Today, since 2 years, this is a pure registration process, except for a restricted area for industry. When you apply to the Chinese government to set up the company, there is no approval. It just, you register the information on the investor, you register the information of the GM, of the legal representative, and this is approved, and that's it. But purely registration, so they cannot reject the application if you fulfill all the conditions. So today, to set up a company, and we got an article in the Shanghainese newspaper yesterday, you need about 1 month if everything is going well, and the fastest setup we did is 1 week before the COVID. And everything can be done online. So they just decided today to file the application online, and it seems we will not be obliged to provide the original document. So I'm waiting to see what will happen, but it's really, really simple to set up a company now. Of course, if you are doing manufacturing, it's a little bit more complicated because you have to apply for environmental impact assessment, and it could take a little bit longer, like 3 to 6 months. But for pure service trading companies, it's very fast.
So effectively, as Nicolas said, the time to register a company is much faster than before. I remind that's the time we calculate from the moment we have all the document available, which takes time, legalize and everything in France or whatever. However, when you get the business license, it's not yet finished. If you want to be operational, you have certain elements to complete. This is why we used to say that a full registration can take up to, I would say, 2 to 3 months, because you need to complete all the other steps. So usually once you have your business license, you need to register at the tax authority in order to take the tax certificate. This is where you're going to give the name of the finance officer. I'm going to explain to that after. After you get this certificate, you have the authorization to open the bank account. And the bank account, the bank usually will ask you additional documents, and you will then open 2 banks account at minimum, one for the capital, which is the one dedicated to the first investment from foreign shareholder, and the second one from what we call the basic account for your normal operation. So I would say that from the moment you get your business license, if you are quite reactive, you would have at minimum another 1 to 2 months to be fully operative. So I would say, even being fast, in less than 3 months, you can get a full operational company, which is quite good, because when I did that 10 years ago, when I arrived, it was approximately an average 6 to 7 months. Now, one of the elements which is key, it's the governance. So when you set up your company, usually Nicolas and myself, we're going to ask you some document. You're going to prepare the document to prove the shareholder, but we will also ask you to choose the governance. And just to remind you what are the governance in China, for some of you it's quite well known, but it's good to reminder. You have one key position, which is the legal representative. Basically, it's the person who is legally responsible for the company. I remind you that the name appears on the business license, and by law, this person should either be the board of director, the chairman, or also the general manager, in addition to legal representative. And after we have all the bodies of the company, the first one is, I would say, the most important is the decision-making body, the shareholder assembly. What Nicolas said before is very important. Before we had a company law and a GV law, and that was basically reformed and was bring everything in one unique company law, where the ultimate body that take the decision is the same, is the shareholder assembly. Representative of the shareholder are selected in order to create a committee, an assembly that will take all the decision at the top. Before, with the GV, for example, it was the board of director who was taking the main decision. So now that's changed. And after the shareholder assembly take the decision, you need the body to execute them. And usually this is the board of directors. In the board of director, you have two options. Either you have an executive director, sole director, usually will be the legal rep, or it could be a board of director, which is usually composed of a minimum of 3 people and maximum 13, if I'm not mistaken.
Yes,
I don't know why.
correct, correct.
I don't know why not 17 or 4. I don't know. That's the rule. And this is the executive body that makes sure that the decision of the assembly are implemented. And after we have the managing body, usually it's the GM, which is also a function. All these functions we are talking here are officially registered within the authority. So the investor, we know, the board of directors should be registered, the GM also. And the last one, it's what we call the monitoring body, is the supervisor. It's basically a person or board that makes sure that you are keeping your account correctly and you're respecting the AOA, the Article of Association. Two other positions that are not here on the slide that you should remember that you need to report is the finance officer. This is the person that you need to put in the tax registration. And there is the MSA contact, the Market Supervision Administration contact, which are 2 persons that you need to report to the authority. And all that you need to do during the registration process. So the point is make sure you choose the right people with the right consequence before going with the registration.
Yes. So once you decide as a board and you decide to invest in China, you have some very basic common mistake you should not do. And this is a mistake I made during 16 years, 17 years in China. So the first mistake is the location. You have many investment bureau in China. Not anymore in Shanghai or in a big city because they got too much foreign investment. And this investment bureau will always try to attract your investment in their hometown to say this is amazing, we'll give you a lot of advantage and so on. Location decision to locate your company, it's a pure business decision. So of course, if you can get a tax benefit and free premise and such kind of thing, it's good, but you have to be very careful to be sure that the location you choose is good for your business. Do you have enough supplier nearby this location? Is it a good place to deliver the product to your client? Are you able to export for a reasonable cost abroad if most of your manufacturing is for abroad? Such kind of place, because if you set up the company only because you know somebody will say this place is amazing for investment, it will be very hard for you to attract the talent and to develop your business. I saw many companies who didn't take care so much about the location, and they just follow the advice of the network, and at the end they have to close because the location was wrong. So we just set up the companies, and after 5 years we just close everything and they withdraw the investment. The second issue you may have is capital underestimation. As I mentioned before, 10-15 years ago, when you decide to invest in China, you have to do a business plan. Today I'm very surprised that in many companies they don't have a clear business plan for their Chinese subsidiary. So you need to assess how much capital you need to inject in the company to be able to start the business, invest, and develop the business. And you know, to invest in China from the beginning without current base, it's very hard and very costly. And many clients underestimate the cost of investment. Marketing costs, for example, you know, you decide to sell your product in a B2C to the Chinese consumer. You believe that by opening a shopping mall, a mall on Tmall or online, it's enough. No, this is not enough. You need to pay marketing specialists to invest at least 1 or 2 million RMB only to be able to push your product on such kind of website and to have some consumer. So the cost capital underestimation it's a big mistake. The good things is today to invest the capital in China, it's very easy. You are not obliged to invest the capital within 2 years like before. That means you can decide to have a registered capital to be contributed within 40 years, 50 years, 60 years. But my advice is always make a little bit higher capital than expected, because a surprise always happens, especially in China. And you don't want to ask your lawyer or your CPA to increase the registered capital every year. So be careful about your calculation. The third point is unadapted governance. Human capital is the first reason for me for a company to not be successful in China. I saw clients who appoint foreign general manager. I saw clients who appoint Chinese general manager, and in several cases, because they didn't find the right people to develop the business, Chinese or foreigner, they were not able to develop their business in China, and they have to close down. So capital is the key, and here also, most of the foreign investors, they don't think to invest on capital, human capital. That means to ask a headhunter to find the right guy to put in the company as general manager, CFO, human resources directors. And this kind of mistake can be very costly, because once you appoint somebody and you ask him to manage a company, to change him and to find somebody else, you will lose like 3 to 4 years to be able to try to do something, and then it will be too late for your company. Unadapted business cost also, it's a big issue. In China, when you set up the company, you have what we call the business license. So this is a certificate of incorporation. In the certificate of incorporation, you have a very specific business scope approved by the Chinese Market Supervision Administration. You can do all the business listed in this business scope, but you cannot do any other business. So when you set up the company, you have to be sure that the business you want to do is written in this business scope. And I always advise my client to print their business license and to put that over their desk and to read it every day and to ask themselves, is the business now is exactly the same? If the answer is no, my advice is to apply to change the business scope, because if you do business without the right business scope, then the Chinese Market Supervision Administration will seize all your profit from the beginning and will give you a big fine. So you have to be very careful with that. And the last mistake you make by foreign investor is, especially for joint venture with Chinese partners, is to not check the work of the agent, the local agent, if they use an agent. But many companies or many firm, foreign firm, law firm use an agent. We don't use an agent. When you set up a company through a Chinese agent, always send somebody to the Market Supervision Administration to check that the job he did was the right job and there is no change of the document. Because when we purchase company or when we got a new client, we always withdraw document directly from the Market Supervision Administration, and sometimes you can see that the agent changed the document without informing the client. So you have to be sure that the setup of your company is the right setup. And if you have any doubt, just send somebody with a company shop at the administration and you can withdraw the full set of documents, and only the document registered with the administration are valid and legal in China. So if the document you have on your hands are not good, then we have an issue. Marco?
Yeah, I can take that. Yeah, sure. uh, yes, sorry. Regarding the merger acquisition, we are talking about, we discussed what are the timing for setting a company. What is the timing to purchase an entity already existing? Because one of the elements that we can discuss is the fact to be fast and running, to be up and running very fast. So usually, by experience with Nicola, with all the acquisition deal we had, where there was quite an understanding between the parties, from the moment you identify the target until the moment you are able to file the change within the authority, it usually takes 3 months. So I would say that once you have identified the target, and there is, I would say, a MOU signed where you agree basically on the main terms. You have, in some case, either or not an exclusivity windows where you're going to do a full due diligence. It means legal, tax, finance. Sometimes in parallel of our work, there is also an operational due diligence, just to make sure that everything we were requested to, we understood in the deal are real. So you do this full due diligence just to make sure that you limit your exposure and liability. Once you do that, you basically close the deal, which usually will be either through an equity deal or an asset purchase agreement. Very important with Nicola, in the past, we had several issues where clients were convinced to do one kind of deal, and after, because of the due diligence, they went to the other side. Why? Because there was tax liability, there was certain asset that were not interesting, or, and this is something usually that can change during the due diligence. And once you close the deal and you sign what we call the SPA, or the asset agreement, transfer agreement, you need to deposit this change at the authority. As Nicola said, if you use the local agent or the agent of your partner, we recommend strongly to have someone overviewing, supervising the deposit. You just want to make sure that if you acquire a certain percentage, it's the same percentage you will have at the end, and not get a surprise. And this is why, in overall, you could consider an M&A to be almost faster today than set up a company, if everything go on as expected.
Yes, maybe a small point. In China, we don't advise you to use letter of intent if you decide to do M&A. We advise you to use MOU, because letter of intent today is very dangerous in China. Because of the new civil code. If you sign a letter of intent, this is considered as a unilateral document, and then the one who issues a letter can get contractual liability. So it's always better to use MOU to make merger and acquisition in China, because you have too much liabilities with letter of intent.
Just Nicola, to precise, in the MOU, both parties will sign, right?
Both parties will sign. Letter of intent is one party will issue the condition, and we ask the other party to accept it. So it's like a terms and conditions. So that means only one party is liable, responsible for the issuance of the letter. But by doing so, this party will have to take the liabilities if she's not negotiating in good faith. That means if we cannot reach the deal, the other party will be able to sue this party, saying that we didn't reach the contract, so I sue you for contractual breach. So this is a small specificity of Chinese law, but this is very important.
Okay. And after, what are the advantage, I would say, of doing merger acquisition? So it's a partner-based relationship, a little bit like a wedding. If you know the person well, usually it's going to be better than going directly with someone you never did business before. It's a partnership-based relationship, and that involves usually trust. The second one, it's what is the advantage? The biggest advantage is usually what we call the guanxi. It's basically the connection, the network, the how to apprehend the regulatory change. What your partner will allow you to do in China, maybe faster than if you would be by yourself. And the third one, very important, it's as we said with Nicola many times, and he repeated before, the most complicated issue in China is human capital. It's the ability to find the right people at the right place, and acquisition allows you to find people that are already expert in their fields, already located. And if you do your acquisition correctly, identifying the right people, you will be able to have a business operating and already on ends very quickly. While setting up a business, you need to take time and create, I would say, the track records in order to be credible on the market. So I think one of the biggest advantages is the human capital, and by definition, all what you buy with the acquisition means any trademark or goodwill, portfolio, any intangible asset that the company can have in addition of what you're buying.
Yes, you know, when you discuss with headhunter in China, they all tell you it's very hard for a new invested company today to attract talent because, you know, this is a new company. Then the Chinese employee, Chinese talent are reluctant to join a company. They are not sure it will still be there in 1 or 2 years. So merger and acquisition allowed you at least to have a clean track record for a new employee and talent.
Yes. And yeah, please go ahead, Nicola.
Yes. So, what are the common mistakes for merger and acquisition? So the first common mistake is light or no due diligence. You know, in China, it's very hard to do due diligence. You need to go deep. You need to do environmental impact due diligence. You need to do operation due diligence. And for me, this is compulsory. You know, if you only do tax, legal, and social charges due diligence, this is not enough because you need to be sure that the way your target is doing the business, this is the right way, and it will be a good acquisition for the market. So operation due diligence is always important. You know, I always tell my clients that if you cannot send people from the business unit to come to investigate, then there is no purpose for you to do the acquisition. So you have to go deep. You have to spend time on it, and we are here to check it and to secure. And now we have access to many information and database from the Chinese government. So we get the experience to go deep, but you have to go deep, no choice. And that's why we don't like data room. Of course, we can have data room on site, but we always ask to the client to go on site to collect the document directly from the target and to visit the office of the target to be sure that the document we got are the genuine document and there is no fake document. The second mistake is wrong or overestimated synergy. When you purchase a company, it's always hard to see if there will be a synergy, but this is the main reason of the target. And you have to be sure that the synergy you are looking for are possible according to the culture of this company and will be according to the plan. Of course, acquisition take times. It's not easy, and surprise always happen. So we know that the planning you have for the acquisition and to implement a common culture in the company and to take over the company, it will take times. But you have to get clear target of what you want and to ensure during the due diligence that these targets are possible. A third mistake is not taking quick control of accounting and bank accounts. You know, most of the company, when you purchase them, you want to the founder to stay in the company and for at least 1 to up to 3 years, and to carry on to do the transition with the Chinese team. And this transition is very important. It does not mean it will be the same as before for this founder after and before the acquisition. He should understand that there is a new investor and he has to report to the investor. So you have to take control of the accounting and bank account of the company to be sure that the founder will not carry on to deal with the company as if it was his own company. And sometimes it's very hard for a founder, not only in China, we got the same in France, to understand that this is not their baby anymore, and they will have at one moment to pass on the business. So most of the time they will understand, because we tell them, look, guys, we know you are very busy, and we'll withdraw this burden from you, and you can focus on the business and on the client, and on the new product line we launch together. So most of the time we can achieve this target, but you should not wait. Once the closing is done and the transfer is done, then you take over the control. Upfront payment, of course, it's the first mistake. We never do upfront payment in China, so we try to extend as much as possible the payment condition. If it's not possible for equity, then we just give part of the payment under the form of a labor bonus to the founder, and we sign a bonus with a clear target for them to stay in the company, and we make the price of the acquisition lower. Because in some part of China they ask a quick payment, and sometimes the government push you to pay within 6 months maximum. So to extend the earn-out, it's very hard sometimes, but there is legal way to do it. But yeah, you should really try to extend as much as possible the payment, to be sure that in the next 1 or 2 years you will be able to achieve the result you are expecting from the founder and the key personnel. And if you are not able to, at least you have some kind of guarantee to compensate. The fifth mistake is to not send people on site in the company, and to let the company as it is before. That means you purchase the company, you keep the personnel, you don't send somebody from your company to work on a daily basis in this company. This is a big mistake, because at the end the founder will always believe this is his company, and the employee of the companies will still believe they are working for him. So you will have a fake control over the company, and you will not have any clear view of what happened in the company. You know, the most difficult, and you have some people helping Chinese investor to merge, or to merge the culture of the foreign investor with the Chinese company. The cultural gap is probably very huge, and to get only one team after the merger, it's very hard, and you need to send somebody on site to bring some DNA from your company inside the Chinese company. And sometimes a good way to do it is to do some cross exchange together. Sorry. That means you ask a Chinese employee of this company to go to your company, and you send people from your company to this company.
Maybe just two little things on the common mistake, and I want to emphasize that, because I had a lot of experience with Nicolas and also in my jobs about the no or light due diligence. I have seen a lot of what we called virtual data room, that frankly speaking, every time we go on site, every time we meet the managers, we usually find the issue not by looking to the document. We find the issue because we talk to people, we met the people, and we're trying to understand any underlying issue. So my recommendation, even if it's a little bit more costly, take the time to send team. And the second one I want to remember about synergies. When you decide about the price of a company, my recommendation as a third party, do not put synergies in your price. Synergies are dreams. They're nice. If they come, it's better. I know a lot of, if you are from the purchasing side, please do not put them in your valuation, because it's going to put too much pressure on you and also on the target. That's a quick insider on that.
Yes, and I always told my team, when you go to visit on site and to do the due diligence, always talk to the taxi driver about the target, because you get a lot of information from the taxi driver. Okay, so of course, one important part of the choice between a merger and acquisition and a new foreign invested company could be the protection of your asset. So it really depends what are your plan. But if you have an amazing product, well protected in Europe or in US, and you want to bring this product or the manufacturing process in China for cost reason. To set up a company by yourself, it's probably the best solution because you will be able to control your intellectual property. And in a lot of industry, they don't rely so much anymore on patent. What they use, it's a very clear system of trade secret and trade protection secret. So they try to keep their technology as confidential as possible because they know that, especially in China, when you have a patent, it's very easy to turn around the patent and you have a much more higher risk. So if you want to protect your goodwill, your assets inside the groups, and you want to bring this technology and this product, new high-tech product in China, probably it's better for you to invest alone in China. Merger and acquisition, you buy a company which has its own cultures, and it's very hard for a company and a Chinese employee who don't get used to reach the level of security you would like to reach. And it will take a lot of time. So I think protection of your assets, this is a very important criteria to decide which way you want to go.
So on, yeah.
No, go on.
Yeah, on this side, what we so we would like to summarize a little bit what we said. So we told you that there are mainly two ways to enter the market. You set up your own company, private limited, or you go for an acquisition. So we just want to summarize very quickly on one screenshot that you can keep with you what are the main pro and cons. So setting up a company, asset protection, it's your own company, you know it, you did it from scratch, you control the process, there is no surprise about the setting up, the document, and usually you are able to transmit your own company culture. You don't need to lose time about integration and all that stuff. On the cons, I would say, of setting up a company, you need to start from scratch. So from a market perspective, it can take long before your company gets credibility and being able to be competitive. You are usually less knowledgeable about the specificity of the market. It takes more time, as I said. In terms of financing option, it's something we didn't go into detail, but usually local company are much less option to obtain loans, even if it's changing a little bit. Your local partner in an acquisition usually have much more. It's much more easier for him to get a loan or any other kind of options. And as Nicolas said, the human capital is key. And usually, when you set up your own company, you start from scratch. It's very difficult to attract local talents.
Yes, and just to complete about that for finance, so when you set up your companies, the only finance you can get is from the investor. It's very hard, and you have a foreign exchange control. So at least when you purchase a company, you have a better and long-term relationship with a Chinese bank. So for merger and acquisition pro, the most important is much more faster entry. Today it's possible to close a deal in 6 months to 1 year. So it's really fast, and you will be able to have a team on site, efficient team, and to start to develop your own products through an existing company. So today, to enter the market, especially when it's very hard to send people in China, to buy a company is a good option. Network guangxi, it's important, but I would like to precise that guangxi is not everything. When we negotiate JV in the past, we have several JV. We did the closing with with a foreign investor, and 1 month after, the Chinese partners went to jail. So guangxi, I would like to use it in the term of in the business, not a political guangxi, not. We have to keep it purely business, and this is not the only criteria. That means You don't set up the JV because your Chinese partner has a guanxi. This is the cherry on the top of the cake. So it's good for you to have it, but it should not be the only reason. Or if it's the only reason, you have to invest for 1 or 2 years and to be sure you will get back your money with a substantial profit. And as Marco said, local financing, the company has a long-term business operation and probably some assets, so it will be much more simple to get loan from Chinese bank. Against for merger and acquisition, IP sharing, you have to be careful because when you buy a company, the network, the way your the target company is working may create some leak in your IP protection. Integration and cultural gap, this is something which is very difficult, and I always advise my client to ask some people to assist them in the cultural gap. You know, the last negotiation we did with Marco, the Chinese founder complained because he thought that the European team of the client was too much arrogant, and we already got a cultural clash during the due diligence. So you have to be very careful about the cultural gap. And as I mentioned before, it's probably much more simple to invest in the Shanghai company, to purchase a Shanghai company, than to purchase a company in Taiwan or in Inner Mongolia. And the gap also could be inside China between your Chinese team and the Chinese team of the target. It's not only between foreigner and Chinese, you have it between Chinese. And the last risk is a higher risk of a split investment clause. Of course, we can cover this risk by contractual clause, but in several cases, and if you check the newspaper, you can see sometimes that the Chinese founder decided to cancel the deal and to go back to set up a new company or to take over the company. So you have to be very, very careful that at the end the Chinese founder will not be able to come back in the competition game.
Thank you, Nicolas. Effectively, overall, when we look at that and with what's happening now in China, we really try to tell our clients that a very thorough due diligence process with an acquisition would be usually a better deal than trying to start from over. There is effectively pro and cons in every step, but today, due to the improvement in the, I would say, the regulatory landscape and compliance rules, we definitely recommend to pursue M&A when you can and when it makes sense for your business.
And you know, you have to be aware that in China we have the same issue than in Europe. That means many Chinese companies, their founders are very old, so you have good opportunities to purchase very valued companies that their kids do not want to get and to manage. So we have these opportunities of very good companies with good market share in China without any people to take over in China.
So that's it for the small introduction about what are the options to come to China. We are going to the Q&A session. Before, maybe I will take the question of Corrado. I will read it. I think there is one question for you, Nicolas, and one more I can answer. The first one is there any threshold for shareholders to have voting rights? For example, if a shareholder have less than 20%, can he not nominate a director sitting on the board or the voting rights? So maybe, Nicolas, you want to reply on this one?
Yes, there is no minimum threshold. The voting rights depends of how much equity you have in the company. We can decide in the article of association to put a high to change the company law threshold. So we can say the majority shareholder will get a blocking decision at 51% or 67%, but normally it really depends of how much equity do you have. When we decide to acquire a company, I always advise my client to purchase 67%. because with 67%, the minority shareholder can do nothing.
And you let us know that if it answers your question, Corrado. And the second one, it's can we really estimate reasonably the cost of a due diligence? Yes, I think you can, and you have to do two things. The first one, you have to be clear on what is the timing you want to check on the past. My recommendation is 3 years. Why? Because 3 years, it's usually what the tax authority are looking after an acquisition. Because usually when a foreign company buy a local company, you probably have a visit from the tax authority within the first year. And usually what they do is they go back 3 years. So I would say you usually go back 3 years, you look to tax, bookkeeping, compliance, and legal. And this one, when you limit the scope, you can clearly assess the amount of the cost of that, plus the, as Nicolas said, manufacturing, operational, and environmental. So it's quite straightforward to decide the cost. The cost is usually related to the volume also of the company, but it's usually we can easily assess the amount. And after, if doing the due diligence something big happen, which could be the case, either you stop because there is no rationale to continue, either you say, okay, we can continue, but we have to consider that in the acquisition price. So I would say yes, we can reasonably estimate the cost of a due diligence based on the scope and on the timing.
Exactly. And if you don't want to spend too much on the due diligence, the other way just to set up a company and to do an asset purchase agreement, and like that, you have a clean company, and you have
what we did the past with Nicola, when the due diligence was complicated because we didn't know how much really the local Chinese manager was significant, we passed part of the payment from the upfront to the earnout. So we increased the earnout. We put some clear targets to the managers, so it would be less risky for the company that was acquiring.
Exactly. Do you have any other question?
If anyone has a question, he can type, he can talk directly, can remove the micro and ask his questions.
No question?
I saw Arnaud putting the video, but I don't know if he has a question. Yes, go ahead.
One remark. So, as Nicolas knows, we do design and construction of mostly factories and warehouse. One of our big business today is to introduce some land opportunities to our logistic clients. And as you probably know, to get those kind of land in China is very complicated. And the one way we are doing is through our network to introduce companies, Chinese companies who bankrupt mostly, those kind of sites. And then we introduced it to our clients, which are real estate developer, focusing on logistics. And each time, so we are doing the technical due diligence. I mean, the assessment and the valuation of the building when it exists and when we can keep it. We are doing otherwise the site, the plot due diligence, so the environmental and the technical one. And our client usually has to take in charge the legal tax, legal tax due diligence. And often question arise from the purchasing part, which is about the hidden liabilities. I don't know if you are familiar with that. It seems to be quite specific for China. So I would like to have maybe your view about how to, and you say during your presentation, which was very clear, now we have to go in very detail, much deeper than
yes,
probably
for land and building, it's of course there is a technical part, but the hidden liabilities could be, you know, when you get an accident on the building, because you know, the quality of the concrete was not good. Could be the pollution of the land you have. It could be the water exit, water pipe, which is not linked to the
network.
the main issue we have in this case is, of course, it's how do we the issue, where does it come from? Is it an issue that you can prove was existing at the moment of the purchase? And in this case, this is very simple. But if it's hidden, they may say no, it was not at this moment. So normally in the contract we can put warranty, but really what we try to do with professionals like you and other professionals, to try to identify all of them and to take it into account for the purchase inside the purchase price, and to avoid it. And if we get such kind of liability arising, to try to mitigate it as much as possible in the contract. And as you mentioned, is the people who are selling, the companies who are saying they are bankrupt. So we know we probably will not be able at the moment to go back to see them, because they will disappear, they will be liquidated. So the best way to protect is to investigate as much as possible. And if there is any doubt, to not take the deal.
Yeah, Arnaud, another thing that the term hidden liability, for the people that are not familiar with financial report, means any liability, any sacrifice of assets which have not been reported in the financial statement. So basically, it's an event, an issue that if you take only the accounts, you cannot find them, because either they don't exist yet, or either the management considered they don't need to report that. So it could be technical, as Nicolas said. It could be a litigation that you are not aware, could become an hidden. It could be a tax compliance that you didn't fill out 3 years ago, and it's not in the account because nobody knows. But the day you get an investigation, it becomes a clear liability. So this is why the technical is important, but also the local, I would say, the intervention on site, because by experience, hidden liability are only found because you talk to people. You never find them in the accounts because they are not transcripted. They're only because you go on site and you see things. You see the status of the asset. You see that the teams are talking you about a litigation you didn't see in the account. So this is why due diligence for me needs to be on site. You know, otherwise you cannot limit the exposure for the purchaser.
But from a legal aspect, if you have, for instance, the company who bankrupt contracted among, I don't know, his friends, borrow some money, a debt. He has a date, but it's not in the account, and the transaction has been made, and there is a new owner who is
asking for the
responsible to reimburse this.
Yes, but you will have to prove the debt, and you know, to claim a debt, you have like 3 years, 3 years timing to do it. So if it's a debt which is not registered in the account, we'll exclude it from the deal, and we'll use a warranty from the funder to pay the debt.
Usually, when you
keep money from the funder, or at least a partial payment, and you try to.
We'll ask a personal warranty from him, and you know, we'll keep an amount, and we'll assess which kind of asset he has. And most of the Chinese funders, they have many real estate, so we can take mortgage, we can take such kind of a warranty.
Usually, what we do, Arnaud, when we sign the SPA or the agreement, or even in the new, we said either you put a personal warranty, either we have an escrow account which will cover any liability that you knew you have and you didn't report in the financials, because the financials are the base for the price. So if you lie on the accounts, you have been misleading on the price. So this is why we say maybe you didn't lie, maybe you were just not aware. So let's do like that. You give a guarantee for whatever comes up after.
But you know, for judicial, for loans, such kind of things, normally we are quite. It could be a fake loan, and they can try to give fake document. So this, it's not easy, but we can dig out and we can find them. What is hard to find sometimes is more the tax liabilities, hidden tax liabilities, and so on. And sometimes, even if you have tax declaration, we may have some surprise from the local tax office.
But Nicolas is right, Arnaud. Usually, when you know how we find out that there is loan that you didn't find, it's when you do the cash flow. When you do the cash flow review, you can easily estimate what are the cash output of the company. And if you don't find sufficient input, you can guess, okay, either there is black revenue that we don't see in the accounts, either you put money from somewhere. Otherwise, it doesn't make sense. So we have way as auditors to find that.
Yeah, thank you very much.
Welcome.
Welcome. Any other questions?
Yeah, I have a question, Emmanuel, here. I think it's more for the lawyer, for you, Nicolas. Generally speaking, in a deal, when you do reps and warranties, imagine in a case you have no escrow account. How enforceable is it in China? Because we hear, but that was like many years ago. It may have changed. That it's very difficult to enforce reps and warranties because it's written in the contract, but in reality, if there is like non-compliance after the deal or for whichever reason you want to trigger a type of warranty, is it enforceable in China? Do you have cases where you would win, a triggering of a warranty?
Yes, it's enforceable in China. You have to be very careful in the drafting. You have to choose where you want to enforce it, and the best way is to have first to be sure that we can get something, because even if we enforce a warranty and the other party hide his asset, it will be very difficult. So we always try to get some mortgage or some other warranty, and sometimes we also use a notary instrument to get enforceable document against the other party without going to the court. And we try to avoid local courts, and we use arbitration commission. The good point today, when you invest in China and you want to execute this kind of warranty, is Chinese people cannot travel abroad, or almost some can, but it's harder. And when we do enforcement under a judicial process in China, we can forbid them to travel, we can forbid them to go to luxury place, we can make their life a nightmare. So compared to Europe, we have much more tools to enforce the warranty. So it's not perfect, we can have some surprise, but in some cases we were able to enforce it.
Right. Good.
But we try to avoid it by the due diligence, and the idea is to have a win-win deal. So normally warranty, maybe you got, from my experience, we got 1% of issue in our case. But when it's happened, those Chinese are not aware that China changes so fast. So they keep the image. Most of the founders are old people, and in their mind, they have all China in mind. The judicial system in China is quite efficient now, and quite effective if you have clear contract and clear proof of the asset of the other party. So we got very good result.
Emmanuel, maybe to share with you an experience. We did an enforcement in a case for one of our clients, and I was surprised how fast we were able to freeze the account. We were able, because it's a little bit like in Switzerland, we have this system also. If we can prove you have an enforceable contract, by security they froze, and after we go to discuss, and after we go to to the judicial. Okay, Nicola, it's more expert on that, but from my perspective, I've seen it already once.
You know, the big mistake I can see from the client who wants to invest in M&A, lot of them do not trust a Chinese judge and may require to put the litigation in Hong Kong if you have a SPV in Hong Kong or in Swiss or whatever. I always advise them to not do it, or at least we split the Chinese part and we keep the Chinese part in China, because if you get a foreign judgment to enforce in China, it's a nightmare. And this is a very complicated. You can make mistake at every step, and it will take you maybe 2 to 3 years to get an enforcement decision. So we always advise the client to go to China, to take an arbitration commission or another tribunal to get a very fast enforcement.
Okay, thanks guys.
Welcome. Any other question? Okay, so if you have no questions, then we can stop there. Thank you very much, everybody, for joining. We don't know when we'll do the next seminar. Could be on the liquidation of a Chinese company after you purchase them. It was great to have you, and we were very happy for you to join for this first seminar, online seminar, which is a first Zoom for us. If you want to contact us, I think you have all our contact information. You have the QR code of Orcom here if you want to follow Orcom. And the contact information. And don't hesitate, you can contact us on LinkedIn if you want the email of Marco or me to exchange.
And I think we will circulate the presentation, Nicolas.
Yes, for the one who want the presentation,
everyone.
we can send you the presentation without any issue. And probably we'll do an update in 1 year to see maybe in 1 year we'll change. But frankly speaking, I really think merger and acquisition is it's the key to enter China today, because it's much more simple. Not simple, but let's say you will save a lot of time, and you will have a team ready on the market without waiting to get your visa to come to China. So I think this is the key really to enter the market.
Thank you everyone for your attention, and we're really looking forward to speak to you soon. Arnaud, you were saying something, or? Yeah.
I just wanted to say thank you very much for this presentation.
Thank you, and it's been a pleasure. Talk to you soon.
Thank you. Have a good day.
Bye.
Bye.
Bye.